Good morning to all. Again, welcoming everyone to the new video with a new topic, that is importance of banks. So in this video particularly, we are going to see why banks are important and what role they are playing in the economic development of the country, to the customers, to the various industries, to the firms, to the clients, and various other aspects that we can regard that banks are the backbone for any of the economy or country like India, or they're serving the various other prominent role in the economy. So we see in the modern time, they're not only the backbone of the financial system, they're not acting like the financial intermediary, but they plays a very crucial role as directors and controllers of the entire economy, of the country's economy. They are the nerve centers of today's commerce and industry. So they are the backbone for any financial system. They are not just the financial intermediary who is just accepting the deposits and granting loans and advances, but their role is very much widespread these days. So they are the leading forces, they are the leading mechanism by which the country's economy, GDP, and other things are based upon. So their significance may be discussed by highlighting the various points which are given as. So bank directly mobilize the savings of the people. So we are referring here as depositing or deposit mobilization. They're acting as financial intermediaries. They provide various sources of loans. There are various sources of loans that can be provided, various types of loans. Wide varieties of loans are provided to the wide range of customers. They minimizes the risk and they transfer this risk from one party to the another party, or diversification of risk we can talk about, right? Another is the maturity transformation role helps in bridging the gap between the buyers and the sellers, or the borrowers and the lenders of the money, right? Reorganization, aggregation and disaggregation of funds, how they are organizing funds with the minimum requirement and arrangement, then transfer of money from one place to another, and that is again with the safe payment facility that is being carried out by the banks. Various kind of CSR activities, they're carrying social responsibility. Social banking is the new emerging term, or that is existing in the market these days. Social banking, having or providing various kinds of ancillary and agency services to the customers, to the traders, to the industries, to the corporate houses, right? And then safety of valuables, that is locker facility and so on, other kind of these facilities, and ultimately providing various source of assistance, various kinds of assistance to the government of India and to the other governments, right? So one by one we'll be seeing why banks are important, what roles they are playing. So the very first one is the deposit mobilization, and when we talk about deposit mobilization, we are saying that banks are the safe place for depositing money, which inducing people to deposit. Thus it is leading to the promoting capital formation, thus promoting production and employment, and generating more employment opportunities for the entrepreneurs, right, and for the job seekers. Now coming to the second one, that is financial intermediaries. So banks are the financial intermediaries between the borrowers and the lenders. So they accept deposit from the people who are having excess of money with them and lend the same amount of money and the same money for many purposes to the wide range of customers, and in return they are bridging the gap between the savers and the lenders, right? So they are acting as the financial intermediaries, and they are the major source of loans to the people who wants money. So in the community's interest, banks provide loans to different users, a wide range of customers, adding to the real capital of the nation. Directly and indirectly they are adding to the real capital of the nation, and thus they are creating the readily available purchasing power. They are increasing the purchasing power of the general public who are taking the loans from the bank, and that too with the widest range the banks are providing, minimizing and transforming the risk. People who deposit with the banks, they face less risk than lending direct to a party who is unknown to them. What I mean by this is, if banks are not there, so we might not provide our funds to any party whom we are not knowing. To the unknown party, to the unknown people, we will not be lending, because banks are acting as the financial intermediaries, and we are depositing to the banks, and banks on their risk are lending those amount to another parties. So what banks are doing, they are spreading this particular risk due to large number of customers and due to large customers base, right? Then again, the similar kind of thing is the maturity transformation. The concept behind is this: the lenders desire to their money to be matured and returned to them after a short period of time, whereas borrowers always wants loan money for a longer period of time. So what banks are doing, they are able to reconcile the different requirements of the lenders and the borrowers. They manages this inter-settlement, and they bridges the gap between the two parties, thus minimizing the risk, and the maturity is being transferred from the between the both the parties. Again, reorganization of funds, and this reorganization of funds comes with two different meanings and concept. One is known as the disaggregation of funds, and another is aggregation of funds. Let us understand this particular concept, these particular concepts. Bank use their large funds to make great number of smaller advances. Say for example, 1 crore rupees has been deposited with the bank, right? But 1 crore loan amount is not required. 5 lakh rupees, 20 lakh rupees, 15 lakh rupees is required. So what bank will do? Bank will use the funds as a disaggregation of the funds, which means that 1 crore will be divided into smaller parts in the cases of advances. Similarly, the just vice versa of it, which means that banks also uses the deposits to make large advances. Say for example, one party is depositing 1 lakh rupees and there are 100 customers. The corpus will become 1 crore. So if a party requires 50 lakh rupees as a loan, so one customer will not be able to meet that particular requirement, but the collected amount which is collected with the bank, so in that case, what will be happen? It will have the aggregation of funds. So 50 customer who has deposited 1 lakh rupees each, now the amount comes to be 50 lakh rupees, and that can be handed over to one of the party, that is the seeker of the loan, right? So these two concepts are known as disaggregation of funds and aggregation of funds. After that, we have the safety of valuables, also known as the locker facility, which means that in order to go for the safety of our ornaments, documents, instruments, and other valuable things under the safe custody of banks, we can go with the bank and have demand for the that one of the important facility, that is the locker facility. So again, not only keeping our cash with the bank, but also our ornaments, documents, instruments, and other valuable items can also be provided security and safety by the banks. So this is why banks are important to the customer, to the individual customers. Then safe payment facility, which talks about the various modes like check and other instruments. People are saved from many difficulties, and these difficulties like inspecting the fake currency and the genuine currency, verifying those currency notes, counting those notes whether they are less or on the higher side, collecting from different places and carrying those currency notes and transferring those currency notes from one place to another. So the another point is transfer of money, which is just an extension of the above point, that is safe payment facility. So many these difficulties are being avoided, removed with the help of these banks and these facilities. Similarly, we need not to carry the physical currency from one place to another place. So in that case, what will happen? Banks provide various modes for transferring funds from one place to another at a very nominal cost, at a very nominal service charges, thereby removing the geographical difficulties coming in the way. So there is no need to carry online transfer methodologies. Modes are there: RTGS, NEFT, check clearing. By just clicking on or using your net banking within the seconds, within the fractions of second, within an hour, 2 hour, in the real time basis, on the real time basis, funds can get transferred without moving to geographical locations at far off places, right? Again, out the social responsibility. So not only they are focusing on the profit motives and commercial nature transaction, but banks are also forming the part and parcel of the large societies, and ultimately they are collecting funds from the society. So they're supposed to serve the various social obligations too. So social banking is one of the same, and other like corporate social responsibilities measures are also adopted by the banks. So they donate the amount. They are also having the go green concept, where papers are or cutting down of trees are being avoided, lesser paper use is there, right? Again, they are educating the people, they are creating awareness about the banking terminologies under the scheme of financial inclusion by the banks. They are going to adopt the villages, bankers are adopting the villages and educating the remote interior areas, making the people aware about the banking and other facilities, other technological advancements. So under the head of this carrying out social responsibility, they are carrying out. Again, the ancillary and agency services. So providing large number of ancillary and agency services to their customers. These services are of great value to the individual clients, the traders, industrialists, and other customers like we people are, right? So financial advice, providing financial advice, portfolio management sort of services, clearing house facility, underwriting of shares and debentures on behalf of the customers, right? Collecting payments, giving loans, and providing EMIs, making payments of the bills, gas, etc. So these are under the ancillary and other agency services provided by the banks to their customers. So in this way we can summarize, there are lot many important roles which are being performed by the banks to their customers, towards the society, towards the traders, towards industrialists and other business corporate houses, right? With these words, thank you everyone, thank you so much.